Good afternoon. It's Sunday, May 25th, 2025. This is Robert Sin at CEO Technician on X at Goldfinger on CEO.ca, and you're watching Goldfinger Capital on YouTube. Wow, look how many tabs I have open. We're going to try to get to it all today, as always. Start with the major indices. I think there's one really important concept here is that we got a long-awaited, long overdue pullback last week, including an almost 2% down day there on Wednesday. Um, the trend is still higher though, and just because the short squeeze went so far, kind of got overextended there a week ago. Now we have a pullback, and I believe the likelihood here is that the pullback will be pretty shallow, pretty short-lived. Maybe we could have a little more downside early next week, but this is not a market that I really want to be shorting or betting against. If we pull it to the IWM, maybe this could get down to 196. That would be kind of like my max near-term downside. I know people are, oh, MACD bear cross and all that stuff. I think the most important thing here is that most people were caught flat-footed in April. The crowd got extremely bearish. I know we got all this data about, they bought the dip and leveraged ETFs. I think the data is misrepresented to a large extent, and I believe the vast, majority of retail investors, traders were caught wrong-footed there in April. A lot of people talking bearish, a lot of podcasts pounding the table on the bearish side. And we got to rip your face off rally for basically 5 weeks straight, right? So a little correction, a little pullback is to be expected. But I think I want to be a buyer of this dip. I want to be a buyer of this pullback. I don't want to be bearish here for a number of reasons. Okay. One of them is sentiment, and one of them is just simply that most people are not psychologically prepared to embrace this rally. They feel it's happening based upon hot air. It doesn't make sense to them. A lot of this tariff conversation is still very much in the water. And I don't think most people understand what the administration is doing, quite frankly, and what this end game will end up, looking like. Right? And I mean, the picture is still being painted, but the fact is, they're going to run this economy really hot. They're going to try to really stoke growth, and that's just not an environment where you want to be negative on equities. You want to embrace equities as a way to not get left behind by higher growth and higher inflation. Okay, I think that's really the way to think about it. Like a stock like Tesla looked awful in early April, dreadful. I mean, what was Elon Musk doing? Right, like it didn't make sense that he was abandoning his biggest investment, the company he founded, to try to cut some spending at the US government, which is a really fruitless endeavor and appears to be he hardly put a dent in anything. And he realizes that his bread is buttered at Tesla, and running his business is not trying to affect change in the Washington, D.C. swamp, right? But it looked horrible in March and April. The Tesla situation, the optics were horrible, politics involved, the negative press he was getting. Yeah, but look, it put in a double bottom, right? And so that's the kind of double bottom, the kind of capitulation, extreme negative sentiment washout that marks a major turning point, a major low in price. And yeah, we've had a nice move off that, more than 50%, but I don't see why this can't get back above $400 a share this summer, right? And I know there's robo-taxi rollout happening next month in Texas, and probably he's sort of overhyped it, but we'll see. We'll see. And Tesla hits a lot of um, key themes in this market in 2025, like the AI theme, the robotics theme, self-driving, EVs. I mean, basically all the key areas that you'd want to be invested in and have exposure to, Tesla has that, right? It's sort of a one-stop play on, emerging cutting edge technology, right? So, hey, I'm not like a Tesla fanboy, but I just call it like I see it, right? Like this is a pretty attractive setup here, and this is a very high and tight bull flag. I'm a Tesla fan here. I'm a Tesla bull here. Um, yeah, the U.S. dollar. We had a little snapback rally there from extreme oversold condition there reached in April, but this is a downtrend, guys. This is a trend that is a secular trend, and I think it's the controlling theme, the controlling trend in markets for the foreseeable future, at least for the rest of 2025, right? And I don't think you fight this trend. I think dollar bulls are pissing into the wind here at this point, and they're going to get run over. When the administration wants to weaken the dollar, they want to orchestrate a weakening of the U.S. dollar. They're going to do it, right? They're going to do it. It's one of the key foundations of the new Treasury Secretary, the new administration's plan to rebalance the global trade system, rebalance the global monetary order, and to attempt to save the U.S. from a debt spiral. Okay, so weaker dollars is just it's happening, right? It's gonna have counter trend rallies from time to time, like it did there in early May, and I think that's just an opportunity to reload on the short side, quite frankly. Euro USD. I mean, the euro is not a great currency. The eurozone is not like a powerhouse economy, but the chart tells a story. It's rising. It's appreciating against the dollar, right? And so, why should we try to fight that? Why should we bet against that? The U.S. clearly has financial repression in its quiver here. They're going to shoot that arrow over the next 4 years. Financial repression, inflation above the yield that savers earn on bonds or savings accounts, right? Financial repression, forcing money to flow into risk assets and make riskier investments. Um, it's happening, right? And so when you're guaranteed a negative real return on your money, you're going to leave that currency and you're going to go to a place where it's treated better, right? And so that's what we're seeing here. And it's a strong trend, not worth fighting. The rising treasury yield, so 30-year above 5%. Where did my other chart go? I don't know. I must have lost it. But the 30 years above 5%, the 10-year got up to 4.6% yield. So the administration is not achieving its lower treasury yields goals. Remember, it's been said a few times, judge us by, the yield on the 10-year, not by the stock market. Well, okay. If we judge them on both, they're losing on both at this point in time, right? Down on both since the inauguration day. But I don't think this move up in yields is due to some debt catastrophe that the market's worried about. I think there's a few factors going in here. Primarily, the market is pricing in stronger economic growth and stickier inflation. I think that's number one. That's first and foremost the driver behind this move up in yields. And then just there's a lot of treasury supply that has to be swallowed up here in the second half of 2025. So the market is adjusting to that. And that's not a secret. That's something that we know, but it doesn't mean there's a catastrophe about to happen. And the rise in yields is a sign of a crisis in treasuries. Now, look, most likely we're at yield levels that concerns the Treasury Department. It might even concern the Fed a little bit. and there could be some stealth QE being rolled out here. Go back to the Zoltan Pozsar article from January 2023, War and Peace. I think this might have been his best ever. And the way we can judge how good some of these market commentaries are is just how timeless they are. Are they evergreen, right? And so a year is a really long time in markets. If you write a market commentary that's still relevant and readable a year later, you're a stud. You're a great writer. You're a great market commentator. Well, 2.5 years later, and all of this is still pretty relevant. Okay, he basically, I mean, you can still kind of use this post as a guide map for where we are today. And he talks about QE and how the QE isn't about putting in a risk asset put anymore, right? It's not about causing the stock market to go to 10,000 on the S&P, right? It's about treasury market dysfunction and policing swap spreads at high levels of interest rates. Kind of like now, high levels of interest rates, policing swap spreads, right? Like the SOFR floating rate overnight rate versus the 10-year or the the T-bill rate, right? So policing swap spreads, creating treasury market function as opposed to dysfunction. So I think we're getting to that point where I think they're going to be a little concerned here, and there could be some room for some intervention. And it's probably going to be stealth sort of intervention. The Treasury has this buyback program that they can sort of pull out of their pocket from time to time and basically come into uh, the Treasury market at the long end of the curve and put in a bid, right? And then just do more issuance at the front end, in the bills, 30-day, 90-day, et cetera. So maybe we'll see that. I think the Fed is still on hold here for a bit. There's certainly not anything that is pressing the Fed to take action, but more than likely the Fed is going to cut interest rates this year, and maybe more than once. I think the how things have played out has definitely caught most market participants by surprise, pretty much every way possible. But just the Fed is, we don't want to make a wrong move. There's a lot of uncertainty. There's a lot in flux. So we're just going to see how things pan out here before we take any drastic action. But the Treasury Department can certainly take action, and I think that they will here step in. Gold ETFs, third largest outflow ever. Meanwhile, gold is rising again, right? So we had this gold liquidation play out here in May, which was great. Reset the market, healthy correction in the context of a bull market. But where's my gold chart? Oh, here it is. Look at that. Basically, since April, was it April 22nd? Gold has just been in a healthy correction, downtrending channel. Some people might call that a bull flag. And just notice that it found trend support, right? There's no accident that this area around 3150 proved to be very supportive for the gold price. Look to the left on the chart, look at the trend, right? TA 101, folks. Now we're at the upper end of this channel. It could just break right through it. It looks like it started to, but I also wouldn't be surprised if there's a little consolidation here, a little pause before it eventually really busts through decisively, right? But this is very constructive bull market price action, and all throughout this channel that's formed over the last month, there has been a lot of top calling, a lot of bulls saying, okay, I'm going to get off the bullish bandwagon for the summer. Gold's in for a pause. It's in for a summer correction. or just, flat out just top callers like 3,500 is it, bull market's over, right? And just you don't see as many people talking about gold the last couple of weeks. So just all healthy stuff in the context of a bull market. No reason to jump off the bullish trend in gold. This is interesting. This is from Bank of America. Sell hubris, buy humiliation. So treasuries have had a humiliating last 10 years. The annualized, returns are now negative. Rolling 10-year returns in holding long end treasuries, 15-year plus treasuries is now negative. And going back to the Pozsar post, his last few bullet points here about the US dollar and treasuries, right? So reduced demand for treasuries. And we're seeing that. We're seeing that in all the data. Foreigners are increasingly diversifying away from holding treasuries. I mean, treasuries like 10 years ago, 2015, it's the risk-free asset. Anybody who just wants to have something they don't need to worry about and super liquid, they just hold treasuries, right? If you've got a few $1 billion to park for a few months, you're just going to put it in treasuries, right? There's no concern about it. Well, now suddenly there's more concern due to a lot of events of the last 5 years, whether it's seizing Russian assets in 2022 or the new administration sort of floating some ideas of um, restructuring some of the treasury debt, which would be a default, quite frankly. And just the fact that we have this de-dollarization, right? We have a significant portion of the globe gradually diversifying away from dollar settlements, from uh, away from settling in dollars, various financial transactions or trade settling in CNY, settling in gold, settling in Bitcoin, settling in rupees, right? Um, so yeah, and there's your end result. Treasuries are delivering investors negative return for the first time in modern history, right? And this is interesting. So gross leverage versus net leverage. So gross leverage is total leverage, longs plus shorts. You add them together. Net leverage is longs minus shorts, right? So the net leverage, about 50% net long, but gross leverage is over 200%, right? So there's a lot of positions out there. Hedge funds are aggressive. And just by what you see here, in terms of what happened in March and April, uh, you had a lot of longs taken off the books and maybe shorts added, right? And so to bring this gross leverage down, more than likely, especially if markets keep moving higher, they're going to be covering shorts. They're going to be covering shorts. They're going to let their longs continue to grow and generate more returns, right? That's kind of how these funds trade. And so we want to look for heavily shorted stocks. And some heavily shorted stocks that worked last week, worked well, were MindMed. That shot out of the gate on Monday with an incredible move intraday, and then finished strong again on Friday, heavily shorted. I think it's like 15% short interest, if I'm not mistaken. Um, Next gen uranium um, miner up 15% on Friday, also 15% short interest, and then UEC, another uranium stock, up 25% on Friday. Look at that volume, right? So definitely some of this Friday price action is driven by short covering. And obviously there's catalysts here for all these stocks. With MindMed, it was some comments made by the commissioner of the FDA about psychedelics and psychedelic therapies and trials and advancing that research. With uranium sector, it was executive orders from the Trump administration on Friday. It just was sort of a shock and awe moment for the sector. But just notice how these are nice, like UEC, this is a really nice chart pattern bottom, and then it lights the match on Friday. MindMed also very similar, head and shoulders chart pattern bottom, right? So sometimes the technicals, the fundamentals, the news flow aligns, and boom, right? We get a launch point. We talked about the dollar, bear steepening boom. So I published this on Friday. Take a look at my Substack. Check it out. TSX Venture continuing its breakout, continuing its uptrend. Platinum, a metal that has been long forgotten and nobody really cares much about platinum. It's all gold, gold, gold. Well, maybe platinum's time to shine is coming. And there's another article in my Substack. Check that out. I'm not going to go into that in any detail here, but put platinum on your radar. Well, the idea of a bear steepening boom that favors commodities aligns with a falling dollar, rising yields, higher inflation, an administration that wants growth, stronger economy. So just put the pieces of the puzzle together and maybe we're in a bear steepening boom phase of the market cycle, right? And there's a lot of doom and gloomers about there about the debt, the deficit, tariffs, trade with China. Well, just look at the copper chart, right? I mean, it seemed like the world was coming to an end there in April. I mean, basically, if there's an embargo between trade between the US and China, copper should drop to like $2 a pound. It should be a complete crash, right? If the world is going to cease up and stop trading with one another, economies are going to shut down. Copper should crash 50, 60%. It didn't. Yes, it had a correction, had a sharp downturn along with everything else in early April. But notice how it held the $4 level and then rebounded pretty aggressively. So I'm calling BS on all the doom and gloom stuff. Copper, one of many metals and charts that are sending a signal that it's not nearly as dire as many make it out to be. And in fact, there's plenty of room for optimism. And maybe it is a bear steepening boom, quite frankly, right? TSX Venture, look at Cameco, again, uranium in an uptrend since early April. You know, the uranium sector was in a downtrend since November 2024. And a lot of us were scratching our heads in March and in early April. The outlook for nuclear energy has never looked better. The administration was talking positive on nuclear energy. But meanwhile, the tariff fears and just the overall negative market sentiment overwhelmed all the underlying positive foundation, positive fundamentals for the uranium sector. Well, now those positive fundamentals have reasserted themselves in this new uptrend, this strong uptrend since early April. And then Trump 2.0's executive orders on Friday, it's just a shock and awe, creating this massive move up in the sector. I wouldn't advise chasing these stocks after Friday's move, but man, they were a hell of a buying opportunity in early April, and there was plenty of time to jump aboard this uptrend throughout April and May. Now it's a little bit extended, but I don't think this theme is going anywhere. I mean, Cameco can absolutely trade up to 60, 65, maybe even $70 a share. Just don't be greedy, okay? We talked about Pozsar. So the TSX Venture Composite is a very imperfect tracking, index for gold mining and for junior miners. GOEX is a little bit better one. It's not super liquid as a trading vehicle, but as far as a tracking like ETF, it does its job. This is a breakout, right? So Friday, the GOEX closed at a new 2025 high. So a bullish divergence from the gold price itself. And you can see this is a multi-year high, right? So the juniors, the mid-tiers, I mean, this is more of a mid-tier gold miner fund, but it's mid-tiers and juniors. This is a new multi-year high, confirmed close, weekly close on Friday. So the miners are beginning to outperform the metal. We had been complaining and talking about the miners underperforming the metal throughout 2024 and even early 2025. Well, now it's flipping. The miners are beginning to outperform the metal. And the smaller ones, are outperforming the bigger ones. Look, the GDX is not making a new high yet. Talked about MindMed. Oil, this is like a double bottom to me. Sentiment is very negative on oil. Obviously, there's been a lot of negative headlines in 2025 to suppress the price of oil. But I have to put on my contrarian hat here and just trade against this $56 double bottom level. I think there's worse trades out there than being long oil right now. And then Friday's session, look, OXY, which I'm long of right now, put in a bullish engulfing off support there, that $41 support level after a pretty good pullback, the last couple of weeks. So this could have been a major bottom across lots of sectors and asset classes in early April. We had a big move up off of it. Now a correction. Now maybe it's ready for the next leg higher. This is interesting. This video came to my attention. The $16 trillion race to mine the ocean is a great video, very well done. A little less than an hour long. I recommend watching it. But it kind of centers on this stock, TMC, which I have not followed at all since it came public a few years ago. Obviously, some people have made a lot of money on this. It's a company that now has a $1.7 billion market cap. They have very little cash in the treasury. They have no revenue forecasts or anything. It's a classic poster child of a junior mining company. A lot of pie in the sky, hopes and promises and dreams about mining the bottom of the Pacific Ocean for these polymetallic nodules, right? So again, I'm not going to go into this in detail here because it's beyond the scope of the video, but there are a bunch of little balls, little apples of metal on the bottom of the Pacific Ocean at 5,000 meters depth. They contain nickel, copper, manganese, some other metals too, but basically copper and nickel are the bulk of it. And these little polymetallic balls might be like 1% copper grade in oxides, right? Um, and they have formed over tens of millions, hundreds of millions of years, right? So this is a very long process to form these polymetallic uh, nodules, and they're basically going to sweep them up off the bottom of the ocean floor. It's very controversial. It's unclear what the effects on the environment will be, but here we are. And clearly, some moves by the Trump administration have created a huge rally in the stock. I would not advise chasing it here at 462 a share, but I think it's an interesting story to continue to monitor. I don't have a strong informed opinion on it either way. I'm a little skeptical about, trying to mess with life on the bottom of the ocean floor and what the unintended consequences might be, but I don't know enough about it. I just thought it was an interesting video, and clearly the market has taken notice here. But 1.7 billion market cap for a lot of hopes and dreams, right? Um, I published this on my Substack yesterday. The copper price needs to double, and it has to do with this report from the University of Michigan. So I recommend you guys take a look, read through it, a lot of good information there. But the salient points are we're going to need a lot more copper over the next 20, 30, 40 years as the world modernizes, right? So countries like India, 1.4 billion population, continents like Africa, 1.5 billion population, they don't consume much copper right now. Right? A lot of these areas of these continents and countries don't have electricity, or they have outdated infrastructure, right? They don't have high speed rail. They don't even have maybe airports or Wi-Fi, right? So as all this infrastructure gets built out, everybody wants more electricity. They want high speed data. They want to be plugged in. They want to use AI. All of it consumes an enormous amount of copper, right? And a lot of our big copper mines that have been producing copper for the last 30, 40, 50 years are aging and running out of ore, right? So they need to be replaced. And due to the consumption requirements of the world over the next 15, 20, 25 years, we're going to have to get that copper from porphyry deposits just because, like, VMS deposits are not big enough. They're not abundant enough to supply all that copper that we need. So we need these massive monster porphyry deposits. So in order to generate this enormous amount of copper, this mind-blowing amount of copper, 30 million tons, 40 million tons a year, um, a lot more porphyry deposits are going to have to be put into production. Either that or we're going to mine the seafloor, get those polymetallic nodules off the seafloor or something. I feel like one of the reasons why there's been this big push for the deep sea mining is because of how daunting the supply gap stands to be over the next few decades, right? And so deep sea mining um, could help to bridge that gap, right? But at what cost? That's the real question. So if we assume that we're not going to, destroy um, the aquatic environment with unknown, repercussions and consequences for the, ecosystem and the food chain and God knows what, um, we're going to have to build a lot more porphyry copper mines, a lot more. And actually, it comes to the sort of mind-boggling number of 100 mega mines over the next 20, 30 years. Mega mines. So these are not 10 million ton VMS deposits. We're talking about billion ton deposits um, with annual production in the many hundred millions of pounds of copper, maybe even up to 1 billion pounds of copper per year. The Grasbergs, the Escondidas, stuff like that. Big, big mines, a lot of earth being moved. Um, and that's just what it's going to have to a lot more porphyries. And so that's why porphyries are very interesting right now. The two primary metals that come from porphyry deposits are copper and gold, two metals that are doing well and are likely to continue to do well. And in particular, in the case of copper, there's a looming shortage of copper production just because the capital intensity to build these big copper mines is high, really high. Um, and there's not much financial uh, wherewithal in the mining industry to build multiple $5 billion capex mines. Even a company like Rio Tinto, they're being pretty cautious. They're not building a bunch of mega mines right now. They're picking and choosing their battles. Choosing their battles. They're mainly focusing on brownfield expansions, not the greenfield new build outs. We'll see what happens with Resolution in Arizona, of which they have 55% of. But yeah, the point is well taken that the copper price has to go a lot higher to incentivize that new production to come online and for big mining companies to take the risk and pay these large capex build out bills to put new mines into production. So that's the main point. And basically, it's like they're making the case for $9 or $10 per pound copper. Not tomorrow, but certainly by 2030, that's possible. So if copper is going to double, let's say the next 5 years, just hypothetically, well, let's get some porphyry copper deposits. So ASCU, Arizona Sonoran Copper Company. This is the Arizona Copper developer, explorer too, but they've already got a resource, a very big resource. They have a PEA, and it's in a pretty good place to permit a new copper mine in Arizona. And this is also brownfields because this was a former operating mine called the Sacaton mine. So it's not quite as heavy of a lift as a completely new discovery in a location that has never seen mining. This is in the heart of the Arizona Copper Belt. So definitely permittable and in an area where the population has some experience and some history with mining. So ASCU chart looks pretty good. Bull cross there on the MACD. The RSI is turning up. Looks like constructive chart. Then Gunnison Copper, another Arizona copper miner, Cochise County, Arizona. And what I noticed here, I was reading this news release about the high value work programs. Definitely a good read to take a look at what they're doing to generate shareholder value and advance the Gunnison project further. But I noticed that over the last week, insiders have been buying shares, right? And this kind of insider buying from multiple insiders, including the CEO, stands out. It really stands out in a big way, in my opinion. It's a significant amount of buying, over 200,000 Canadian dollars total. And again, it's from multiple insiders. And then you scroll back, and I think that this buying that happened at the end of 2024 at lower prices, so the share price of GCU is lower in 2024, also sends a message, right? It sends a message that they see value here, quite frankly. And if you go back all the way through history, I mean, there hasn't necessarily, I mean, okay, it was a different company name previously, so you'd have to look at the Excelsior Mining, history, but it sends a message of value that at these prices, 15, 20, 25 cents, the prices at which the insiders have been buying in the last year, they are seeing a value in GCU shares. And obviously, there's no shortage of catalysts on the horizon. Just look at the company's news flow and then the executive orders on copper in the US. Right? Talon Metals. So this is one that I have talked about a couple times in May on my Substack. So please check that out. They are premium articles, but it's not a secret that I have tuned into Talon since March when they made a new discovery at the Tamarack project in Minnesota. The new discovery was a massive sulfide unit, MSU. And look at the company's news releases. I don't have it up. Actually, I do have it up. I do have it. I had the last one up. Um, you can see the drill core. You can see the grades of the last hole that they reported. 23%, nickel equivalent over 8.25 meters. So you can see the breakdown there, 12.62% nickel, 13.88% copper, and 18 grams per ton platinum and gold. That's really high grade, right? Really high grade. So that's what sort of woke the market up here to this fallen angel in March and April. It had a downturn in early April, with everything else in the stock market. That even gave another entry point for those who may not have bought at 8 cents in March. They got another opportunity in April. The market was being nice to everybody, but obviously with the latest news release, this one May 12th, a second discovery hole into this MSU that is even thicker, 34.9 meters of massive sulfide has been intercepted in this new zone, right? And I dig into the news release to talk about the company on my Substack in a premium post, but you can read the news release for yourself and just understand that it seems to me that this company became such a fallen angel that even if they told you we have a great new discovery, nobody cared. It literally got to that point. Nobody was interested because they saw that they saw the chart, the downtrend of the last 3 years. They thought the company needs to raise money. or they just saw the share structure and they just figured the stock wouldn't move up, right? But share structure, yeah, obviously it's important, something I talk about quite a bit, but at the end of the day, it's market cap, it's valuation, especially when a company has a resource, they're more advanced stage, they're permitting, they're working on a feasibility study. It's about market cap because who is the ultimate buyer here? It's a major mining company, right? It's not about Joe Public, guys like me or you that are going to move this stock. It's about the big mining companies and what they're interested in and the value they see, right? So market cap, valuation is what really matters. And so you just need to ask yourself, what's 60% of what looks to be an absolutely world-class copper and nickel PGE deposit in the US worth with government grants, with an offtake agreement with Tesla, all those positives that you could sprinkle in there. What's 60% of that worth, right? Because they have 60% and Rio Tinto has 40%. So you got to ask yourself that question. And quite clearly, these news releases about this new discovery adds a lot of potential upside to whatever that number ends up being. Because if you're mining 23% nickel, your profit margins are going to be pretty high, right? And you don't have to move a lot of earth at 23% nickel grades to be very profitable, right? And to get a pretty fast payback of your initial capex, right? And so there's people that are, oh, they woke up here in May and they started thinking about that and doing the calculations, and then what might these assays look like when they report in the next couple of weeks. I'm not sure when we're going to get the assays, but I think it's a pretty reasonable assumption based upon the last hole that we'll probably get it by early June. And then a little FOMO kicks in, a little bit like, oh, I need to get some of this. Right? And I think that's what we saw start to happen at the end of last week with that push up above 20 cents. And so we'll just have to see, right? And there's more drilling. Obviously, they're doing more of the geophysics that they do, right? The patented uh, borehole, electromagnetic that they've sort of perfected at Tamarack. They're doing more of that, more drilling surely into this discovery. And so the market starts asking the questions, what's possible? Like what if, right? And obviously the trend is your friend. So if they hit two in a row, can they hit three in a row? Can they hit four in a row? And that's where you get this sort of move up in the share price. So Talon is very interesting to me, and I think it's a very interesting story, and also very instructive how the junior mining sector is still a great place for speculators who understand, who can add context to news releases, and frankly, are paying attention. Because there's a whole bunch of people out there not paying attention. They couldn't care less about mining, junior mining, certainly couldn't care less about Talon Metals. And Talon Metals is one of the better companies in the sector, quite frankly. Right? They have a great deposit, they have a great project. Still, under the radar, when you put this in the context of the broader stock market, the US stock market, North American financial markets, it's not even a drop in the ocean, right? And even, it's interesting, I'm getting a little long winded here, but even Friday's volume, 10 million shares. The stock charts doesn't have all the Canadian volume, but it was 10 million shares was the total Canadian volume in Talon on Friday. So multiply that by 20 cents, it's 2 million Canadian dollars. 2 million Canadian dollars. So yeah, it's a huge volume day. 10 million shares, stock up 17%, 2 million Canadian dollars. So literally one high net worth investor could have generated all that volume on Friday. Not difficult. It's 2 million Canadian dollars, right? So just to put things into perspective, um, yeah, all right, I'll just leave it there. And then gold miners. I'll talk about Onyx and Westward Lake, and we'll call it a week. Onyx is very much still a bull market adjustment trade. So look at my videos, look at my Substack, learn about the bull market adjustment trade. I pointed this out a couple weeks ago at MIF in Vancouver. Still very much in the bull market adjustment phase here, and it's volatile, right? So that's one of the points I made in my presentation, is that these stocks can be really volatile, right? So they can move up and down 20, 30, 40% over a couple of days and shake people out, right? They shake the speculators out because they're so volatile. And every time it drops 30%, oh no, that's it. That's the top. I don't want to get caught holding the bag, and people sell. And then a new higher low is put in place, and then it makes new highs, right? And so that's what we're seeing with Onyx. There's nothing to suggest that this bull market adjustment trade is over by any means. Very much still intact, still very much in motion, and understanding the context of the discovery um, at the Argus North zone there near Timmins. Probably good chance they keep hitting in the subsequent holes, right? They're not stepping out huge from that, new discovery hole. I think it was hole 69, right? They're testing it up dip, down dip, and they know the structure. So odds aren't super bad, right? They have a pretty good understanding of what they are into. Obviously requires drilling to confirm, but this one looks very good to me. And then West Red Lake. So another example of junior mining in the opportunities to speculators who are paying attention here, right? So we all knew that this bulk sample that was announced on May 7th was a big catalyst, really important. A lot of people were skeptical heading into that. And so that was announced here around 65 cents a share. And the results were good. Like by any means, the results were positive. Okay. I mean, obviously, some people might say it was A plus, some might say A minus, but it wasn't like a C or a D. It was a positive report, right? And then they tell us about the gold sales, the proceeds from the gold sales, and then more drill intercepts, really impressive, drill results. So just a reminder that this is Red Lake, and drill intercepts like 52 grams over 4.5 meters are possible and actually borderline probable here, right? And then they draw down another 12.5 million from the Nabari loan, and then they restart the Manson mine officially just last week, right? So positive, 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 building momentum. All those news releases are building momentum. And okay, we're back to where we were in early February. So literally, the gold price is higher. The company is more advanced. They've hit some key de-risking milestones in the last 3 months, and we're just flat to where we were 3 months ago, right? Okay. It's the market. The junior mining sector is tough, and a lot of the speculators in this sector are skeptical. So there's still some skepticism here, but the momentum is building, and they're mining, right? And so mining at $3,300 gold, a high grade gold mine in Red Lake. Interesting. I think that's it for me here today. Already I went over time again. I can't help myself. It's just how it is. I just have to accept it. Um, Again, as always, please hit the like and subscribe button if you enjoyed this video. If you get value from my content, please subscribe to my Substack, to my YouTube, follow me on X, and consider a premium subscription to the Substack so you get everything I write, including the premium articles, in your inbox as soon as I hit publish. Have a powerful trading week. Thank you.